Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi Singh. Welcome to another edition of our weekly podcast. Global equities trended mixed over the past week after higher than expected US CPI inflation and core inflation data pushed bond yields higher, sending major US equity benchmarks lower from their record highs in the previous weeks. Asian equities continue to enjoy a positive momentum, with the MSCI Asia ex Japan rising more than 2%, led by China offshore and Hong Kong and Taiwan markets. Supported largely by Chinese tourist activities and the tech and AI sector optimism after strong earnings reporting during the week. Back home, Indian equities rose over the past week. The Nifty index rose 1.3%, driven by strong macroeconomic data and strong conclusion to earnings season, despite foreign investors continuing to sell for the sixth consecutive week. Broader markets witnessed sharp volatility and underperformed large caps over the past week, with the mid-cap index up 0.5%, while the Nifty small cap index was down 0.5%. Among sectors, auto and IT led the winners with gains of over 2.4%, while metals and FMCG led the losers with cuts of over 0.5% over the past week. The Indian fixed income market had a stable week, with Indian government bond yields falling marginally across the curve, driven by lower than expected domestic CPI and WPI inflation data, while the US bond yields rose higher, driven by a higher than expected US inflation print. The 10-year Indian government bond yields fell 1 basis point to close at 7.10%, while the 3-year and 5-year Indian government bond yields fell 1 basis point each. The INR closed flat for the week at 83 per dollar, as strong domestic macro data balanced the impact of rising US bond yields, higher crude oil prices, strengthening US dollar, and foreign investor outflows. Brent crude oil rose around 1% to close at $81.9 per barrel, posting a weekly gain as simmering tensions in the Middle East overshadowed stubborn inflation in the US and a murky demand outlook for the year. Among the major macro updates for the week, the first was on India's industrial production, which improved to 3.8% year-on-year in December 2023, up from 2.4% recorded in the previous month and market expectations of 2.4%. Manufacturing output, which accounts for about 78% of total production, advanced 3.9%, accelerating from a 1.2% gain in the previous month. On the other hand, output eased for mining, electricity. Considering the April to December period, industrial production rose by about 6.1% year-on-year. The second data was on India's trade deficit, which narrowed to USD 17.5 billion in January of 2024. This was the lowest recording in 9 months, and also lower than the December reading of USD 19.8 billion deficit and market forecasts of USD 20 billion. Exports rose 3.2% year-on-year to USD 36.9 billion, while imports went up slightly slower at 3% to USD 54.4 billion. The final data was on India's wholesale price inflation, which rose lower than expected at 0.27% year-on-year in January of 2023, lower than 0.73% recorded in December and market expectations of 0.53%. The slowdown was primarily attributed to a lower rise in food article and primary articles, mainly driven by a further decrease in costs of non-food items. At the same time, costs continue to fall for fuel and power, electricity, and manufacturing. On a monthly basis, wholesale prices went down 0.33%, moderating from a revised 0.98% drop in the previous month.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.